Hey, thanks for checking out the Aaron Advantage. You know, there's a lot of myths about the mortgage industry that a lot of people believe, but today I'm going to talk to Tyler Hinds to dispel some of those rumors. As I mentioned, my name is Aaron Luttrull. I'm here with Tyler Hinds today. Before we get started on the topic of the mortgages, Tyler, why don't you tell us a little bit about who you are and what you do?
Sure, great. My name is Tyler Hinds. As Aaron said, and I've been doing mortgages in our area for the last 10 years. I really enjoy helping people obtain home ownership. It's a lot of fun.
Fantastic. So kind of the purpose of this video today is to dispel some of the myths about mortgages. And the first thing I want to talk about is the fact that the National Association of Realtors published a study. It's the 2017 profile of aspiring homeowners, where they said 68% of non-homeowners believe you have to have 10% down before you can buy a home. And actually 30% of people who are non-homeowners think you have to have 20% down before you can purchase a home. Kind of fill us in on the truth behind those.
Yeah. Those statistics don't really surprise me. I get people in my office all the time who are just kind of shocked and can't believe how obtainable home ownership is. So they say, you really mean I can, get in a $150,000 house for what I'm paying in rent? And the answer is yes. So there are a lot of really, really good low down payment and in some cases no down payment programs out there. So it's really important that you talk to a knowledgeable mortgage lender who has the access to those programs and the knowledge of those to know what you might qualify for and what might be a good fit for you.
Okay, fantastic. Now, that's a good thing that you just kind of mentioned first off, that you talk to a mortgage lender who has access to programs and the knowledge of the programs. Now, you're a mortgage broker, is that correct?
That's correct.
So kind of tell us what a mortgage broker is and kind of the difference between you and, say, like a bank.
Sure. So as a mortgage broker, I work with a lot of different banks. Some really big national banks and some smaller local ones. So it gives me access to some really cool programs that maybe some of the local places just don't have. So that's really the main thing. It also gives me the ability to shop around and so make sure I'm getting the best deal for my clients.
Excellent. So we've mentioned a couple times that there are some low down payment options that are available. Most people are typically concerned with like the conventional products that exist. Most people think that those conventional products only exist at 10% or 20% down payment options. There are some lower down payment options available. Can you kind of walk us through a couple of those?
There are some really good conventional programs out there, and you don't have to have 20% down. So just a couple examples. There's Freddie Mac Home Possible, Fannie Mae Home Ready. Those are typically as low as 3% down, and they in some cases the way I can do them is with no mortgage insurance. So you mentioned mortgage insurance, PMI. A lot of people have heard that term. They know I don't. Maybe they kind of know what it is, but maybe not. But usually, if you don't put at least 20% down, you have to pay mortgage insurance, PMI, in one way, shape, or form. So some programs have an upfront fee that gets added on to the loan. Some have a monthly fee, and some have both. I've had some programs, conventional loan programs, where you can put in some cases as little as 1% down and not have to pay any PMI. So it really increases the buying power of my clients and helps keep their payments low.
That's fantastic. So, I know there are some instances where a buyer may not qualify for those conventional loan products, or there may be a better option that's available for a buyer that may be outside of the conventional products that most people know about. Can you kind of talk about, the government-backed securities that exist and kind of what those programs entail as well?
Sure. So there's other really good loan programs out there. There's three main, we call them government loan programs out there. And like Aaron mentioned, that it just means they're backed by one department of the government or another. So the first one I'll talk about is VA, Veterans Affairs. That is a really, really good program. It's no money down and no monthly mortgage insurance. So talk about increasing buying power and keeping payments down. That's a great way to do it.
Now you did mention it's the Veterans Affairs. Who would qualify for that VA loan?
That's correct. So obviously veterans of military service, active duty members of military service, and active duty Reserve and National Guard members and their spouses or widows. That's who qualifies for that as long as they have enough eligibility. I know one thing that you asked me in the past was a lot of people think I can only get one VA loan, right? And That's actually not true in all cases. So in some cases you have enough. Everybody gets a certain amount of entitlement, and as long as you have some entitlement left over, you can buy another house, or you can, if you sell the home that you're in or refinance the loan of the home that you're in, the VA loan, home that you're in, you can get that entitlement restored. So it's a really kind of complicated formula on how much entitlement each one has and how much you go. So I would just recommend speaking to a knowledgeable mortgage person on VA loans. So.
Absolutely. Now, with the other type of programs you mentioned, FHA was the other one. Can you kind of walk us through down payment requirement and some stipulations that are associated with the FHA loan?
Sure, yeah. So FHA, a lot of people think it means first-time home buyer. It actually does not. It's Federal Housing Administration is what that stands for. It's a great loan program in that it is a little less strict on credit issues, a little less strict on debt to income issues. So they're a little more forgiving on those. So 3.5% down is the minimum down payment. You can put more, but that's the minimum down payment with FHA. That can be gifted. So a gift would be, usually it's from a family member, but and that applies to the conventional loan programs we mentioned earlier as well. That those funds can be gifted. We just trace them from the donor, is what we call that. But FHA is, it's a really strong program that kind of helps people obtain home ownership that might otherwise be left out.
And what's the down payment requirement on that?
The down payment minimum is 3.5%. So.
Perfect. All right, and then obviously there was one other one that you mentioned that people in high metropolitan areas may not be familiar with, is the USDA loan. Tell us a little bit about the eligibility on that and the down payment options that exist with the USDA loan.
Yeah. So USDA, U.S. Department of Agriculture, the same program that grades your meat and eggs, has a rural housing program. So it's designed to help facilitate people in rural areas, so non-urban areas, to obtain home ownership. So it's a great program. It's no money down, and
you said no money down.
Zero.
Fantastic.
Zero money down. So to mean you can negotiate the seller to pay the closing costs, you can get in the house with no money down. There are there's some geographic limitations, like I mentioned earlier. It's not for urban areas; it's for rural areas. So basically, most of Evansville and most of Newburgh do not qualify. You get in some of the outer layers of Vanderburgh County and Chandler, Boonville, all of those areas do qualify, so along with pretty much all the surrounding counties around Evansville and Newburgh do qualify for that program. There is also some income restrictions tied to that. So those vary from depending on what specific area you're looking in and the size of your family. But a lot of people do qualify for those.
Right.
And it's a great loan program for people looking in those areas.
Fantastic. So now we know kind of what the programs are. You got a brief rundown of what they are. Obviously, there's going to be requirements that everybody's going to have for what they qualify for and what's the best option for them. And as a realtor, the first thing I do when I'm working with a new buyer is I send them to a lender to figure out what those options are and kind of get them pre-approved before we get the process started. Now, PreApproval and PreQualification are two terms that are prevalent throughout the industry that a lot of consumers think can be utilized interchangeably. Is that the case? And if not, what's the difference?
Yeah, so PreQualification, I'll start there. PreQualification is more of a general idea. So maybe it's a conversation that you have with a loan officer. Maybe it's something you type in, plug in a little bit of information online and get. But they may try to get a basic idea of how much income you make, roughly what your credit score is, and what your monthly debts are. And then from that, tell you, well, this is approximately how much house you can afford. I usually tell people those aren't worth the paper they're printed on necessarily, because there's a lot of things we have to check. We have to go in, actually pull a credit report, look at the debt to income ratio, analyze the assets, analyze the loan through what's called an automated underwriting system. You do all of those things ahead of time. That's what a pre-approval is.
So there's a little extra step that you're taking to make sure that the information that they're providing in that conversation is actually verifiable and accurate.
Correct, so that we can know that it's not going to be a problem in the loan process. So basically that pre-approval letter says, if it's done properly, says you go find the house and everything else will be in place, ready to go. So that's what I prefer to do. I like to get all the documents in ahead of time. I like to go through it, and so I know my clients know and the realtors involved in the transaction know that if they've got a pre-approval letter from me, that they're going to be good to go. So the buyers can focus on, what's important to them, getting things packed up and not having to worry or add stress to the transaction.
Right. Now, Tyler mentioned a couple things there that I think are really key important things to take away that may have glossed over some people. You mentioned an automated valuation or automated underwriting process, as well as having the ability to do online pre-qualification. So there's lenders out there that are spending millions of dollars in advertising every year to talk about the ease and the efficiency and the cost savings of utilizing an online resource versus a local lender. Now, I know for a fact that utilizing someone local is definitely something that as a realtor is better for me and my clients. Can you kind of explain what it is that you can do as a local lender versus what these online promises that are made actually end up being?
Right. Yeah. So, like you said, there's a lot of money being pumped into online advertising and advertising through other media. You may have heard the Rocket Mortgage, and just click a button and you're going to get a mortgage. I can promise you that's not exactly how it works.
And shouldn't.
Right. So there are some automated verifications and things that are available that we can do, that we have access to. I think the biggest problem people have had, and my clients have experienced it with online lenders, is a couple things. So one, the first guy told me this, and then I had to talk to this person, then I had to talk to this person, or I had 4 people ask me for the same document, or the first person told me that they could do this for me, but now they're saying I can't, and I can't get this loan. I don't understand. And part of that is, me as a local person, I have accountability here in the community to Aaron and the other realtors in the community and my clients. So if I overpromise and say that I can do something that I can't, that's going to reflect negatively on me. Where so obviously I don't want that to happen. My reputation here is everything. That's
that's what our business is.
That's what everything's based on. So the online lenders that are basing it on just flooding your inbox, flooding your your commercials, or radio with advertising, they're depending on that to bring in revenue. Not necessarily accountable. So if they tell you they can do a loan for you and then they can't, no big deal. You'll never see them. You'll never see them at the supermarket. You'll never talk to them again, in all likelihood. So that, I think, is one of the things that's most important difference, and also it costs. So those online places tend to have a little bit higher fees and higher interest rates as well, even though they advertise differently.
Right. And the other thing is, they talk about Rocket Mortgage, click a button, get a mortgage. They act like the speed of which you're going to be able to get through the process when you do it online is a lot faster. Now, I've found that not always to be the case. Can you kind of talk about what kind of timeline you're looking at when somebody comes in and work with you as far as giving you the purchase agreement to closing on a property and how that looks?
Sure. So as I mentioned earlier, I like to do as much due diligence as possible up front, so it makes that transaction speedy for you once you're in a purchase agreement. So typically, as a mortgage broker with access to some of these sort of national lenders that some of the automated verifications do work well, and I do have access to all those. So kind of combining the local knowledge, working with all the local title companies and insurance agents and all that, and we have a pretty smooth process. So we're typically, industry average, I guess, is somewhere right around 35 days for to get a purchase agreement to clear to close. We're somewhere in the 2.5 to 3 week range on average, so well above that, well below that, I guess.
Yeah.
So that's something that I think that we bring to the table that people have been really happy with.
Yeah, I can tell you I've done several transactions with Tyler representing buyers that I'm working with, and I've also represented sellers where he's been the lender for the buyer who's purchasing the property, and having that local individual who's there, who's making sure that we're going through the process, doing the due diligence up front, and making everything as smooth as possible is one aspect that's phenomenal, as well as the communication that you're going to be able to get, because like you said, he's got that accountability that these online lenders may not have. Just closed a transaction yesterday where I had the seller and the buyer kind of had apologized because they were using an online lender and just never got the updates that were necessary and didn't know where they were in the process. That's another recommendation that I can make to say definitely utilizing someone who's local here is something that's definitely to a benefit of a buyer. So I think we've covered a lot of great information today. Is there anything else specifically that maybe I have missed, or something that you kind of want to hammer home to make sure that people understand about what you do and what the benefits to using someone like you is?
Well, and I think just overall, and maybe not even touch so much on myself, but it's very important to work with a lender who has access and knowledge of all of the programs that are available out there. Each lender is very different. That's why I like to work with a lot of them, because not everybody's a good fit for each program or each lender. So that's probably what I would take away from the most. So.
Well, Tyler, once again, just want to say thanks for taking some time out today to have this conversation and give out this information. Really appreciate it, and appreciate you helping us out today.
I appreciate you having me out, and thanks for listening. If you guys have any other questions, please feel free to get a hold of myself or Aaron.
Hey, thanks for checking out the Aaron Advantage. Be sure to check the description down below for all of the contact information for Tyler Hinds, as well as links to everywhere you can find him online. Be sure to like this video and subscribe to my channel to stay up to date with everything I post.